Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. Starting off this video with dollar updates. The first one is dollar Sing, that is the US dollar against the Singapore dollar. Now on the 28th of July, I described how dollar Sing is forming over here, the second shoulder of a head and shoulders bottom, a bullish pattern. Dollar Sing completed this pattern on the 30th of July with a rally, but has since entered the correction phase. Now remember, chart patterns occur in three phases. There is the completion and currently the correction. There may be a bit more downside for dollar Sing, but not much I reckon, before dollar Sing rebounds to enter the bullish resumption phase. The textbook target of this bullish pattern is at 1.3065. The last video on sterling dollar was posted on the 28th of July, but that video was actually made on the 27th of July when markets were closed. In that video, I said that sterling dollar is forming a head and shoulders top. On the day of the video posting, 28th of July, sterling dollar over here completed this head and shoulders top bearish pattern and has since entered the correction phase. Now this is common, as I said earlier on. The correction phase should eventually be rejected, and I see the next resistance is at the Ichimoku cloud over here around 1.3465. After the rejection comes the bearish resumption phase. I continue to target a decline to 1.2948. The Kiwi dollar completed its head and shoulders top on the 30th of July, but very quickly entered the correction phase. Now here is the tricky part. Kiwi dollar over here closed above the 20-day simple moving average, but quickly lost it the next session. So I'm not sure if this is a sign that the correction phase has ended. I am just going to assume that it hasn't, just to be more cautious, and expect a bit more upside from here towards the Ichimoku cloud, and the resistance is around 0.5984. And I expect a rejection to happen somewhere around here to lead Kiwi dollar into the bearish resumption phase. The textbook target resulting from this head and shoulders top is at 0.5688. Dollar Real, which is the US dollar against the Brazilian Real, is turning out to be a textbook chart pattern. In the video on the 12th of July, I said to expect some correction over here. And this correction could take time, after which bearish resumption phase is expected to begin. Now, dollar real over here was again rejected at the neckline, and this time it fell below the Ichimoku cloud. I believe the bearish resumption phase is underway, and the textbook target of this head and shoulders top is pretty low at 4.9543. Don't forget there are two supports, one at 5.4063. We are nearing this level. The next one is at 5.2871, both of which has the potential to bounce dollar real higher when tested. The Aussie Kiwi could also turn out to be a textbook chart pattern. In a video on the 21st of June, I said that there could be a near-term pullback due to price action over here, overextending above the upper Bollinger. Since then, Aussie Kiwi has pulled back to around the neckline, slightly below, before resuming the upside. This is the typical chart pattern development: the completion phase followed by the correction phase to slightly below the neckline before entering the bullish resumption phase. I believe Aussie Kiwi is now in the bullish resumption phase, and the textbook target of this cup and handle is at 1.1188. I will only be reviewing one equity name, which is on Eli Lilly. I first covered Eli Lilly in the video on the 5th of April and said that it is forming a head and shoulders top with a lopsided shoulder. I have adjusted the neckline, this one, to be slightly downward sloping to accommodate for recent price action development. Now, price action showed a lack of upside strength after failing to hold above or break above the Ichimoku cloud 3 times. Eli Lilly has since completed this bearish pattern this week via a weekly close below the neckline, which is around 709.27, and the textbook target is at 453.71, which is a downward revision from 529.71 in the first video. I expect the next move for Eli Lilly to be higher first in the next 1 to 3 weeks to correct this sharp decline, after which downside is expected to resume. I will now move on to names that I will no longer be covering in future videos. I'll start off with Citigroup. I started coverage on this name on the 10th of November 2024 and cautioned the formation of a head and shoulders bottom that has a textbook target at 97.49. This pattern was typical, with a completion phase and a correction phase, though deeper than I expected, and the bullish resumption phase. Citigroup reached a high over here of 96.91 2 weeks ago, reaching about 98% of the textbook target. I will no longer be covering this name until there is new development. I will also cease coverage on Adidas. I started covering this name on the 17th of March, somewhere around here, and said that it has completed a rising wedge with a textbook target at 168.55. This target was 100% reached in last week on the 31st of July. Now, just to add a bit more on the latest price action development, we saw huge drop last week. This week, price action overextended, way overextended below the lower Bollinger with what I think is a downside exhaustion candlestick. So I expect Adidas to actually recover from here, probably posting 1 to 3 weeks worth of advance as a form of correction. Last but not least, I will cease coverage on Cisco Systems. It completed a rising wedge but failed to decline and instead rallied above the last high. I consider this to be an invalidation of this bearish pattern, so I will no longer be covering Cisco in future videos. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.